I'm a teacher by trade, so I look at this from the standpoint that I think that we need to trade smarter, not harder. We need to trade smarter, not more. We need to trade in a semblance of finding what works in the market and go with it instead of trying the market to conform the market to us. The market does not care about you, in case you're wondering. It really doesn't care about your opinion. It really doesn't think whether you know what you get. The market is an inanimate object. It trades every day with or without you. And it really has no opinion whether MACD works, stochastic, or any other technical analysis, fundamental quant strategy, or any others. It says it sticks its tongue out at you most days and will spit on your grave when you're dead. And that's my opinion of the market. It doesn't really care. What matters to me is whether or not I, as an investor, can make money in the market. And who controls that? I do. Not the market, not Wall Street, not anybody else. You're totally in control of the trading process. The problem we get into, and part of my background is in psychology, so I've had to deal with, matter of fact, we taught a class for going on 28 years now called Money Psychology 101, which is dealing with the 4 inches between your ears. And the problem is that we want to cast our opinions onto the market. The market is down today at roughly 1.6%. It's down on news in China. It's down on the fact that everybody's afraid of something, somewhere, somehow, some way. We've had a sentiment swing in the market, if you haven't noticed. In the last 4 trading days, we've had a significant sentiment swing. That's a negative sign for the market. If you're a trader, you should be looking at how to get out. If you're an investor, you should be looking how to hedge. That's my opinion of what's going on right now in the market. The market will correct, and it will correct more than you think it will, or it will correct less than you think it will. It will go higher than you think it will. It will do anything just to make you wrong. Are we on the same page yet? Amen. So I say that because what I'm going to talk to you about, I don't think that any one box works. I talk to traders all over the United States. I have people email me hundreds and thousands, some days it seems like, emails of what they think or believe the market should be doing. And I always send it back. It says, you're the only person who cares. Because it really is that inanimate. And so when I look at Stockfinder or whichever of the 3 softwares you use, free stock charts or telechart, it doesn't really matter. Whatever scans you build may work today, they may not. If you backtest them, you're using historical data. Historical data is always right. It's the forward-looking data that we all have a problem with. And that's the data that will tell you whether or not you make money or not. Fair? So I always like to start with my premise, and that is that I think that the market is going to kick your butt any day that it possibly can. So what I want to look at is looking at how do we make it easier for you to trade. How many of you have ever heard the old analogy of finding a needle in a haystack? Anybody? That's scanning 101. To me, anytime I scan the market, I'm looking for the proverbial needle in the haystack. How much easier is it to find a needle in a sewing kit than in a haystack? I scan to find the sewing kit. I want to find the kit. I want to find the piece or the component of the market that gives me the needle. I don't want to have to scan 8,000 stocks or 1,036 ETFs. I want to scan 136 ETFs. I want to find the 5, 6, or 7 that are moving in the right direction for me, up or down, because I don't care which way you trade the market, short or long. You can make money in either direction. And so what I'm looking for is, where's the needle? Who's falling apart the worst? And one of the needles that I found recently, I just want to put this chart up here because I just find this fascinating. Oh, maybe I don't want to put it up there. Isn't that a fascinating chart? You want to know what that is? That's municipal bonds. Those are muni bonds. And more important, they're the national insured muni bond ETF that's out there that thousands of people, millions of people have their money invested in. Because it's safe. How in the world do muni bonds go from 107 to 102? They lose $5, 4.5%. They only pay 3.8% dividends. They just lost 110% of their dividend distribution for 12 months in a matter of maybe 7 to 8 trading days. That's the needle in the haystack. But it wasn't in the haystack, it was actually in the sewing kit. The sewing kit was called bonds. And the bonds, how did I get to bonds? Interest rates, what have they been doing the last 10 days? Going up. TLT, if you look at it, went from 109 to 96 in 2 weeks. What happened? The 30-year Treasury yield jumps from 3.56% yield on the 30-year Treasury up to 4.23% yesterday's close. What does that do to the price of bonds? They go down. Now, how did I find all of that? I didn't scan anything. I did not run one scan on bonds. I didn't run any technical analysis. I didn't run anything other than the 4 inches between my ears that said, I have been a trader for 30 years. And I know that when interest rates go up, bond prices go down. And I also know that when the dollar goes up, commodities go down. And if the dollar goes higher, commodities go down, right? If commodities go higher, the dollar... See, these are all... How many of you know these rules? Do they work 100% of the time? No. But do they give you an opportunity to filter the market down without scanning 10,000 things? No wonder your hair's gray. Some of you, I can tell who doesn't scan. You're married. Or you could be like me and have 4 daughters. But the idea is that what we're looking for is how do we do this? So how do we do this? I start with 3 key components every day. First, I look at what's out there from the market from the standpoint of what do I want to do? I want to have ideas. I trade a lot of ideas. Where do I find them? I thought I'd bring Sarah with me today. There's nothing. This is Bloomberg Newsweek magazine. Bloomberg bought Newsweek and had to put their name on it because they couldn't stand it. It'd be like Ford buying General Motors and keeping the name General Motors. God forbid we'd actually use something that works. But what's interesting is that when you flip through this magazine, let's just flip to the table of contents real quick. And I'm going to show you how all of this comes back into play. I can't find the table of contents. And when I go through here, it breaks it down into 6 categories, and they're new. It's just news. And because this is a left-leaning magazine, I have to I can only believe half of it. If it were right-leaning like IBD, I could only believe half of it. But But the point is that there's things in this magazine. One is Sarah Palin, and what is Sarah Palin upset about? The debt. She's mad. Who else is mad about it?
Me.
Glenn Beck. Mr. Gold. They're mad about the debt. What does that mean? If we start to get into the debt and all these things, are there ideas that we can trade out of all of that? Does any of that news impact the market on a day-to-day basis? Do this. Yes. How many of you trade? How many of you invest? How many of you do both? You're in the right place. Because this is news that impacts trading. This news will not impact investing. Investing says I'm looking out on a time horizon 12 to 36 months out. I find more ideas out of Newsweek and Forbes and everything else. I got all kinds of them. Obama's tormentors. America? No. They were Bush's tormentors too, weren't they? It's amazing. How many of you have seen any interviews with George Bush lately? Yeah. Has he gotten humble in the last 2 years? Where was that guy when we needed him 10 years ago? Forbes, master of the brand, and this, all I do is I pick up magazines and I start filtering through them. Now, here's another thing. ProShares. This is all the ETFs offered by ProShares. Here are the top 50 largest ETFs. Here is a list of all the ETFs offered by PowerShares. Here's by Spiders, here's by iShares, and here's by Vanguard. Those are your largest ETF producers. They produce this material, they give it away everywhere they can. You can go on their website and get it. And what do I do with it? Here's what I do. If you look right here, you pop this down, you can scroll down here, and I don't have all of mine. I had to put some stuff on my laptop last night so that I would have this. But you can see Power Shares ETFs long, Power Shares ETF short. So let's go to the shorts, and there are all the shorts. Now, where did I get that? I built the list. I went in and pulled this out, and I built my own watch list, and there they all are. Can I scan that list? When would I want to scan that list? Today? Market's down 1.5%, 1.7%. Should I be scanning this list today? What am I going to start looking for? Look over there to the right. What's happening? They're going to start reversing off of the lows, and what you're going to start to see is somewhere in that list, we just passed it, is something that's interesting to me. Now, I didn't write the scan so that to go through here and make the lights light up, but I can write scans that filter that out and tell me which of these are true or not. Fair? And what am I looking for? I'm looking for a bounce off the low, number one. Can you write that scan? Absolutely. I'm looking for it to eclipse a previous high. Do I have two highs there prior to? So I want it to eclipse the previous high, and I want the volume to be 10% above the 50-day moving average. Can I write that scan? Now, why do I want to scan 10,000 things when I can scan 62 that are all designed to do what? Take advantage of the market going down. There they are. I just filtered 62 things. I didn't have to filter 500. I filtered 62, and I come up with, that's the ProShares Ultra Short Euro. Why is the euro going down? The dollar's going up. How do we know that? We could type in UUP, and we can see that the dollar's going up. We can read the paper too, but I don't like that. Only half of the paper's true. I'm just kidding. I think I'm being generous, actually.